All right. Good morning, everybody. Good morning, and welcome to a new week. Welcome. It is Monday. My name is Aaron, and I am excited to be here with you this morning. Let's run through a couple of things. First of all, it is Labor Day. I believe I told you that there would be no market wouldn't be open today, but that is a stock market. I didn't realize the futures would be open. So we're here. We are trading. We're going to see what price does. I think we'll analyze this in just a second, but going to get some of this here. Before we move on, guys, I'm listening to music right now. I'm listening as we go. But before we move on, I want to go ahead and take a second, take a minute. Um, man, I felt compelled. And sorry about the background noise. There's a bunch of background noise that's gonna happen throughout the morning. I will be muting myself as we go while we are in these trades. But for now, we are here. So hold on. Actually, let me close the door. Give me 1 second. I noticed I was talking and I was muted, so I need to have like a identify that somehow. Anyways, it's happened a couple times. Anyways, I was saying that I want to share this part of what I do in my life in this stream, just like trading is a part of me at this point, and I want it to be a part of me. Um, I'm going to share part of my faith here. And what I'm going to do is basically read the verse of the day every day with you guys on the stream. whether you're a believer or not, whether you believe this in Jesus or not, I think I just want to share with you, right? So today's verse is from Ephesians 5, verses 1 through 2. Well, verse 1, but we're going to read 1 and 2. Follow God's example as dearly loved children and walk in the way of love, just as Christ loved us and gave himself up for us as fragrant offering and sacrifice to God. Hmm. Yeah, I like this. Follow God's example, therefore, as dearly loved children. There's the verse of the day. Some of these verses are awesome. And like, I love how the Bible app just gives you like a little background to go with it. Uh, I don't know that I don't get this one, but it's just cool to have a sort of preset background for them. Anyways, that's that. Thanks for allowing me to share that part with you guys. It's a little morning blue light. All right. Anyways, good morning. All right, here we go. Let's dive into price action. Let's see what price has been doing, and let's see what we can capitalize on. And let's see if we can get some moves here. So I'm going to show you on MNQ real quick what I did. So this was yesterday at open, right? I took this model to the highs. I was looking for this high here, but it didn't get taken. So I took half of my position here, moved my stop loss, and got stopped out around here, which is fine. I still managed to. So this was the trade stats that I had, right? 3.6 to 1 RR entry. This was sort of a risky entry. I saw this, right? Just reject. And so I entered here. We had taken this, well, not taken, but we created equal sort of lows here from that first test of that gap. So I decided to give it a shot. It was a small risk here from here to down here. I went in for it. I went for it. 4 micros. We traded back into that 30-minute fair value gap. I was looking to take out some of these, like these two at the same time. That didn't happen. And that's where we're at. So we saw this sort of become an order block, and just it failed here. But this is also the 1 minute, so keep that in mind. Man, my little rainbow cup. This is my daughter's. She made it. It's all chipped up and everything. Okay, so why did I look at this? Why did I take this? I wrote this down. I sort of journaled as I took it. Why is this a high probability 1 minute market maker buy on in this case buy model? High time frame liquidity above 1-2 points. This was the hourly highs here. We had just taken this one, so that's why I was like, okay, maybe we don't take this, right? So I still took half here. We generated liquidity on the way down. Okay, like if I go back to the 1 minute, there was a few points of liquidity that we were just generating, right? Boom, 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 boom. Ultimately took them out. It became a roadmap for price to move. That's what it did. I kept going back and in and out of between the 15-minute and 5-minute to see if there was anything else that would possibly give me a uh, I was just analyzing price, right? As we move forward. This 30-minute fair value gap, I was really hoping and looking for it to hold. So it did here, as you can see, right? And then we had this sort of breaker block. The order block and breaker blocks are basically the same thing. Breaker block is basically a previous order block that got invalidated. And I was looking for that to hold. It held pretty good all through here. But then it just broke right through into the 30-minute fair value gap, broke it with like two moves or a single move on a higher time frame. We try to we held below it to go lower. That's where I got stopped out here. I got stopped out right about I'm gonna say like actually I think I got stopped out right here. Right, we wicked down, came back up, try to test it again, boom. Couldn't break through it one more time. This was sort of an inducement move here because we have this first test of that fair value gap, right here. Didn't quite do fill much of it. This was a sort of an inducement of this into that fair value gap, so this would have been a better confirmation to go lower, but I was still looking to go to take out this high, right? So mind you, NQ did not take this high. That's why I was like, okay, so NQ has not quite taken this high here, or this. M and Q took this high, right? So just that's what I was looking at. Um, ultimately, I I thought we could have a second model, but we did. We just dropped here. So that was my trade. I'm gonna get rid of all of this. If you want to, I don't know if you guys want this or not, but this is what I was looking at, and the reason I took this, right? I measured that manipulation move, right, which would have been from this low to this previous high. Before that would have been our sort of a turtle soup confirmation to the upside, right? If we break above that, which we did. So from the bottom of that to the top of that move, that manipulation move, with a standard deviation of -1.5, right? And that takes us here. One is sort of a safe, really, really safe area to take profit. But I was looking at 1.5. 1.5, the closest thing would have been here. Low hanging fruit is this, and then the second point is that. So that's how I analyzed, and that's how I went about this trade here. And I get rid of it. Boom. All right. Let's look at the daily for a second. Here we are on the daily. So on the daily chart, oh wait, this is, yeah, here we are. On the daily chart, what have we done? We've basically filled this gap, right? So this one's done. Basically, it did its job. Now it held. Now we're trading above it, right? We have not entered into midpoint of this full move, right? But if we're counting this as the move, we still haven't come into midpoint of that. We went down, I think it's just more than 25% of that retracement move. Let's say probably like a 30%. Let's see. Let's see what we get. 30% is there. Yeah, just about 30%. So we got a 30% retracement here, which honestly, I'm not mad about. What is the thing? Isn't it like 38% or something like that? Let's see. Fib. 38.2%. That's what it is. 38.2%. And then it is also 23.6%. 23.6%. Two retracement locations here that we can look at. 50% is usually what we try to do, but you know, it is what it is. Trying to figure out what color I want to make these. Yeah, I'll make them green, so we don't really see them much. And then we'll make this there. That makes me feel a lot better. Okay. Let me save this. Boom. All right, so then we have retracement down into 38%. Boom. It's like perfect into that 38 actually. Yeah, I mean barely, but dang. Okay. So right now I don't care to see it come down. It'd be cool if it came down to this mean threshold of this whole move. Guys, I gotta figure out if I'm using these things right. Hold on. I'm just gonna say midpoint of this whole move. All right. Now that we know, okay, we filled this gap on the daily. I want to see us take it to this high and this swing high here. All right. So right now I'm really interested like in a daily chart, I'm bullish. That's on a daily. Now, it's going to take us a while to get up here, right? And take out these 2 points of liquidity, possibly move into this fair value gap here. Right here. It's going to take us a little while. So yeah, we can look at the daily, but honestly, the daily doesn't serve us much of a purpose at this point. It's just to know the overall direction of where market could possibly go. I'm going to look at the 1 hour. I'm going to get rid of these real quick. Look at the 1 hour. Let's get rid of all these drawings. We don't need them. Then the 1 hour. So do you remember how we've been trying to take out this swing high here, like these equal highs? Couldn't really do it here. We took out one. I think we took one of these. Left and left basically 1, 2, and 3 open, right? So these are so close together. I want to see us take that out. So we're gonna take from here to here. These points are what I want to see taken out. Could we take them out today? Absolutely. We could take them out today. These, so let's call this, let's change this and let's make it red. Nice and red. We don't need a middle line. We're going to extend to the right. We're going to call this relative equal highs. This is on the, yeah. This is on the 4 hour. We're just going to call it high time frame relative equal highs. High time frame, relative equal highs. We're going to go to the right inside. Okay. So there's that. We're going to do the same for this. This just tells me there's a bunch of little points that we want to take around this area. All right, so I'm just gonna do this here. Boom. All right, so now we have our points of liquidity for today. We also have, I'm looking at this and I remember, like, okay, we have some points of liquidity down here. All right, we have our swing low. We have all of this liquidity. We could, boom, just take it out. I mean, clearly my drawing is not that great right now. But you know what I'm saying? We could basically like come here, take out these, and start, just moving lower. So what's the goal for today? The goal for today is to participate in the market. That's number one. I think we just get a little too scared. We're just going to participate in the market, okay? We're going to anticipate a cost of business, meaning we need to figure out what we're planning on losing today. Well, so what we're planning on losing, right? Not necessarily what we're winning, right? Because what we're gonna do is look for 2.5 to 1 trades, all right, or above. Okay. What else are we gonna do today? We are we're gonna sit, or actually we're gonna commit, is that how you spell it, to trades. Oh, it's 2 M's. Duh. We're gonna commit to trades, meaning once we've entered, we don't get out of it. We just manage it. Dynamically, you can manage this 2 ways, right? And the first way is gonna be once let's just say if you have a 3 to 1 trade, right? Then what you're gonna do is once 2 to 1 gets reached, you're gonna take half off. Okay, and then break even. Boom. So then you took your risk off the table. You basically took your trade and you're letting one of these one third of your, or sorry, the half of your position run to the next target if there is a target. That's our goal. My goal for today is anticipated cost of doing business, meaning per trade, I'm willing to risk $280, right? That's me. Yours could look like $70 or $100 or whatever that looks like. So the cost of doing business, meaning, let's just see, where are you? Here it is. Let's see, 280. And if I find some like really great setups, oops, then that's my cost of doing business for 4 trades. 1,120, right? That's what we had. That's my cost of doing business. So that's what I can anticipate to lose today, right? So there we go. Also, I saw this yesterday. I was going through ChatGPT, just reviewing some stuff, asking for like numbers and stats and risk to reward ratio stuff, like all of these little things that I just want to know. And this is one of the things that it came up with. It said, I am not defined by my wins or losses. I am defined by my discipline, patience, and commitment to my trading strategy. I thought this was really good. This last part, whatever. I thought that first part was great. I am not defined by my wins or losses. I am defined by my discipline. Actually, I'm going to change this because TBH, your boy doesn't care about committing to my trading strategy. I'm super I'm not one of those like, that's it, do it. I think there's a lot of flexibility in a trading strategy. This is gold right here. I'm not defined by my wins or losses. I am defined by my discipline and patience. Right? You guys like that? We'll keep it like that. It just looks fuller. It looks nicer. Anyways, that's it, right? And to participate in the market. That's what we're gonna do. Don't be scared to participate in the market. Anticipate a cost of doing business. There it is. That's my cost of doing business right here. This is my cost of doing business. And might even put this here. Cost of doing business. Done. Yeah, there it is. That's it. So I can just, it's literally right there. I'm not defined by my wins or losses. I am defined by my discipline, patience, and commitment to my trading strategy. Participate in the market. That's number one. Anticipate cost of doing business per trade is 280. That's a total of 1120. Look for 2 to 5, 2.5 to 1 trades or above. Commit to a trade. Just commit to it and manage it. Once we reach three to one trades, once 2 to 1 is reached, take half off, move your stop loss to break even. Yep, that's it. That is it. All right, so I've got this inducement level sort of indicator here. It just allows me to see where prices basically at, right? So here, so look right here, for example, we got this swing, boom. I would feel comfortable entering this, all right, to take these highs. So we're creating a small market maker model to the buy side here, or to this point of liquidity, right? So let's say yeah, let's look, here is literally a model presenting itself. It's 1.5 right there. This is a model that's presenting itself, right? And we can start to calculate stuff like this. So we know where price is wanting to go. So let's take advantage of this. Let's say worst case scenario, we enter here, right? Then we have, see, that doesn't work for us unless we want to take this high. Let's say we do want to take that high, okay? Can we make this a 3-to-1? Yeah, we can right here. Get out of here. Okay, no snapping. Here we go. What could price go here? And make this 3-to-1. This would be a 3-to-1 here. Is this something that I'm willing to take? Yeah. Right? Because we're playing this model here. Right? And this model is wanting to take us higher. If you look at this manipulation move, right? This would obviously, let's look at the 15-minute. Whoops. Let's get rid of that. So if we look at the 15-minute and we look at this manipulation move, right? Here, where is it taking us? It's taking us above all of this, right? It's actually even taking us to here. Are we gonna get there right now? I don't know. I don't think so. I don't know. Like we'll probably come back, do all the things, but we could probably take some of these trades like this. So am I gonna take this? I think I'm gonna give it a shot. This is a market maker model, clearly playing out in a small time frame. So if my risk is 280, right? 280, let's go with, sorry, let's go here. Where do we say we're going? Right up here. Create a limit order. Yeah, I'm okay. So what I'm going to do is actually, I'm going to go with 10. And that's my trade. That's my trade for right now. Okay, I'm not risking all of my position. I'm risking half of my position, half of what I've anticipated to risk. That's important. Okay, so let's go back here. And what I'm going to do, because I think this could play out really well, I'm going to add to my position here. Okay. This is already, this move here, this is 50%, right? So does it have to go there? No, not at all. I'll probably add to my position if we get to this OTE here, right? Maybe this OTE. I'd like to see us, yeah, I'll probably add to my position here. So let's just say we get to this optimal trade entry here, create limit order. We'll do 10, right? Now my risk is 195. 195, right? I'm just gonna sit here. I mean, if it hits, it hits. If it doesn't, it doesn't, and that's okay. I think because we wanted to see a 3-1, right? And honestly, 3-1 is right here. It's right up here. So if you feel comfortable taking that, go for it. But look, we have a fair value gap here. We're trading in that fair value gap at the moment, above, right at the, so now my entry now is at the bottom. Traded this into this fair value gap, into this order block here, or breaker block, right? The top of that breaker block, perfectly. Honestly, I would feel really good on this trade. I think I'm gonna go at 3-1 to start. Right? Yeah, I'm gonna go 3-1. My risk is 150. Okay. Yeah. So 3-1, if that hits. Oh man. And we want to take out all this liquidity. Oh, but you know what? Let me get rid of this. Dang, I think we may not even get in this trade. Guys, because I have to do it here. I keep forgetting. Okay, so we're gonna get in. Yeah. This is how many let's get in here. What do we say? Okay, so we're in a, okay, our position is 19609. There. Now we're in. Entry is 1960990. So this is a 3-1, right? 10. This is how much we're risking. 155. All right. And let's just kind of figure out why this wouldn't be a sort of a low probability sell model, right? At least for me. Why would this be a low probability? Now we could get stopped out like as I'm talking about it, but why would this be a low probability model to go lower? Well, yeah, we have all of this liquidity that we could, come back and draw, like take out. If we look at the 30-minute, do we have anything on the 30-minute? Let me get rid of all of these drawings. We do have something on the 30-minute. This is important. We have this fair value gap here. This is a 30-minute fair value gap. Okay. So we have this 30-minute fair value gap. This is a balanced price range because there's two fair value gaps, right? This is a bearish, right? That got broken. It becomes an inverted fair value gap in another fair value gap. So balanced price range there. So we could see that get traded into. Okay, what else? What else do we have? We have on the 30-minute, that's about it. What about on the 1 hour? On the 1 hour, it looks like this becomes a breaker. This becomes a breaker, right? Price could come back in here before going higher. 4 hour. Oh, okay. This is interesting. Look, we have this is what is this? It's some sort of pattern. I don't remember what it is. It's either evening star or morning star pattern where it's like bearish candle or candle, little dragonfly candle or doji or whatever you want to call it, into another expansion candle. Guys, I kind of learned this when I first started, but then it's like it didn't make sense to me. It didn't work. So I stopped. Anyways, that's what we get. We already saw the daily. We're rejecting, right? We went down all this as soon as market opened, right? We traded. We haven't traded above this, which is interesting. Came back midway point of this whole candle, right? Almost, yeah, almost halfway. If we look at it, this way, this is 38, right? 38%. 38% ish. Yeah. So do I expect this to come back? Not right now. Could. I want to see us take this out before we come back, right? Low hanging fruit would be this high, right? From Friday. But right now, as it stands, low hanging fruit right here. See it? This is all low hanging fruit. Did we have what was our trade here? This is a 19633. I want to see us take 1966 63275. Yeah, right there. That's yeah, I mean that's basically 2.5 more than, it's basically a 3-to-1 right at this point. This is basically a 3-to-1 trade. When do I expect us to come back? Come back and maybe create a sell model before moving higher. Honestly, if I'm being like super honest with myself, taking this point here. Okay. We don't have to take this yet. We could take this, create a market sell model here, and then take it out. So we don't have to take it out here, and I have to be aware of that. I have to pay attention to that. Would I want to see us take that out? Absolutely. Absolutely. That gives me a little bit, because then at that point, there's really nothing. And look, there's another point right here. Do I want to see us take this out? This would be an easy run, right? And that's what we've been trying to do, you know? So we created this liquidity here. Boom, boom, boom. Is this a run that we can take out? And this is 3 points. 3 points of liquidity that we want to take out. So now that we know that, okay, we can figure out what we can manage this trade well. We understand that, let's just say if we break below this, this becomes, right as it stands, becomes a market structure shift. The problem is we haven't quite swept anything in a larger time frame. This is a 30-minute. This is an obvious swing point is up here. Obvious swing point is down here. Right? Obvious swing point up here. Right? This is sort of a hidden swing point, but you can see it traded below, traded up, right? And then ultimately fell. So this was a swing. It's just not super obvious, but it's there. That's why I'm not taking low hanging fruit, which would be here, but I'm taking a very obvious point that if I see enough strength here, we could take this. My stop loss is right at this swing low. Right? It is at that swing low because if we measure this move, we came back, rebalanced this move. So this move is balanced. There's no need for us to come back to here yet. Now this move did not get balanced all the way. This move, we move back into what is that? I need to be able to see that green a little bit better. Yeah, there we go. That's much better. Save as standard deviation, optimal entry. Yes. Okay, there we go. So we move back in between, I'm going to say 20, almost 30% of that. And here we go. We're expanding to the upside. We are expanding. Can we see an expansion all the way up here, right? We could be, this could take us right up here, right? Or it could take out this point here, retrace, come back if it creates a fair value gap or something else. Right now I see this, right? And I'm just looking for reasons, like where could price come back to? I'm looking for reasons. I'm not, as much as I'd like to see us come out here. Okay, baby, I'm coming. So I'm looking for price to come up here, right? So I'm looking for reasons, like why would price come down into this area here? So then it just allows me to stay calm in the trades. It allows me to be able to know that price can always come back, right? Close. So even if there was something that, like, for example, so we came into this fair value gap, is this an inducement, right? Is this an inducement for it to go lower? I don't know. Again, my bias right now is higher until we take out these points, at least this point here, right? Price clearly is trying to get somewhere higher. And I'm okay changing my bias, right? So we looked at and this is the problem that I had on Friday. We looked at the overall, the daily, and I think I was so stuck in my bias on Friday that I missed out on the possibility of price going lower. So I don't want to make that mistake again. And at least I know what I'm looking for, what to sort of expect, you know? Let's look at, I need to make this. 1 0, yeah, 3. Let's go 0 3 3 0 6 6. One, yep, one there. Maybe I do want a background on this thing. So I can see where my so basically this would be 1 to 1 here, which this is, we're now below it. 1 to 1, 2 to 1, 3 to 1 according to my risk. All right, so I would mark it out, and this is just allows me to basically see where we're at and manage that trade. Let me add negative 0.33. This should give me, oh, okay, so I need to go, okay. What is this? 1 point. Okay, so 1.33. This is my, yeah. There. So there's my 3 to 1, and I can manage that and basically just figure out where I'm at on this 3 to 1 move. So I know now I'm 1 to 1. If we go up here, there we go, 2 to 1. Can we break this? And honestly, I'm not taking positions out. What I'm gonna do is just manage my risk at this point, right? This is another thing I want to do. What is point 3? Okay, I need to do point 0.1. Feel free to copy this if you want. 1.163, 1.163, 0. Yep, and then 1 here. And then we get rid of that, and we get rid of that. We go like this. Yeah, what is this? This is 0, right? We do 1 here, red, then 0. Okay, yeah. So 1.63, this can go away. 0.66, yep, here we go. This becomes that. This becomes this. This becomes that. Great. Save as. Yep. Done. Okay. So now I've basically created a fib that allows me to, let's see, mark from this point to my take profit and get a 3-to-1 risk reward idea. Break these into quadrants basically, right? So first quadrant, 2, 3, and then my risk. And I can see, and I can manage my trade this way. I can say, okay, well, we've reached 2-to-1 at this point, right? So do I take half of my position? I could. So let's do let's just say I do take half of my position, right? Wait, where are we? Have we taken? We haven't taken that. I will take half of my position right here at 19,628. Right here. Next position that I'm taking off. I'm going to take that off here. What was this? 63275. Boom. Once this hits up here, right? Once this hits at this high, this low hanging fruit, I'm taking half of my position. Oh wait, we already took half of our position. Okay, so half of our position is off. So now we're gonna de-risk this trade. We're actually gonna move our stop loss not all the way down. We're gonna move it to 19,606. Right here. There. Now I've taken profit. My position is, I mean, at this point, this is we're gonna let this run, right? There's no need for us to. Now we can breathe. That's basically what I'm saying. We can breathe. We did what we needed to do. Things are starting to play out. We took position. We took some at 2-to-1. Moved our stop loss to half of our original risk. All right, I will be right back. Boom. What happened? I totally missed this. Oh, it took our profit. Let's go. And that's that. We did it. We did the thing. Okay. What are we looking for now? See if we can get back into this fair value gap, right? How? But by breaking this swing point here. Can we break the swing point, or do we want to go higher? Make sense? Does it make sense on how I got this idea? Right? Higher probability. Draw liquidity is higher, right? Not lower. I'm not planning. There's nothing down here for me. Draw liquidity was higher, right? It's been high for a minute now. Now the real draw liquidity that I want us to take out is up here. This is something that maybe I'm just like attached to this right now because we've been trying so hard. Like we tried, boom, failed, right? This failed to go any higher. Like I do think draw liquidity right now is higher. Also, I just want to see what my risk would have been. What would have been so we said 5 contracts, right? $37 of risk, guys. $37 of risk. This is what happened, right? So we started with, and I want you guys to see this. So let's just say we were at a 2-to-1. Right, let's create limit order. We went 10. Okay, $150 of risk to make 310. Okay, that was or sorry, let's just do 5 because $75 to make, create limit order 70. Come on, dude. $75 to make 155. Great, that's not bad. Made 155 ish, right? 140. I think I took it down somewhere down here. Not necessarily a 2-to-1. Okay, 155 in the bag, right? Our original risk was 150, right? 150 original risk. So we took some profit. And what do we do next? Then our next half of our other position was this. This is what we managed our position to. So we had taken 150 bucks of profits. So even if this went against us, we've already made what is that? 110 bucks ish out of that, right? And so we took home 230 bucks once we did this. Left the runner, go to these highs, right? De-risk, $37 of risk. We could have put this at break even and had nothing, but I'm okay. Like 37 bucks like this is what I get. This is what I want to get better at. I want to get better at understanding and seeing all of this play out. Let a model present itself. If I miss the model, we missed this. This was overnight. We missed this. But did we reach any point of liquidity? No. So I was confident that we would go up here. Oh, you guys can't see. All right, sorry. Yeah, you guys couldn't see that. Anyways, let me go over this again. So we had a 2-to-1, right? Let me make 2. Let's make 2 of these. We had a 2-to-1. Or sorry. Our initial, I'm gonna go right here because I think we took it a little bit early. Like right here. Our initial, so this is half of our position, 75 bucks to make 125. Okay, whatever. Okay. And then that was our initial, right? That's our first. We took profit or our initial risk here, right? Our initial full risk um was I think 150, yeah, 150 bucks was our initial risk, right? Um but what do? We took profit around this area, half of our position. We took 125, right? De-risking this to 75 bucks only. Half of our position is still in play. We moved our stop loss, half of our risk up, right? This is why I marked this. Moved our stop loss because I knew there wasn't anything else that down here that price could reach into. If there is, then maybe I won't move my stop loss, but there wasn't. So stop loss is moved. Now what do we have? Now we still have half of our position waiting for this high to get taken, right? This one, not this one, this one. Okay, so this is half of our position right here. Now our risk on this trade is sitting at $37.50 right here with a profit of 230 bucks right here. I To me, I don't have to catch this full move, right? I don't have to. I think I can just manage my risk and do it well, right? Like we took low hanging fruit. We took half at low hanging fruit, right? The other half here. I don't need to catch, I don't need to wait up here. Right? Eventually I want to get us there, right? Will it be this move? Possibly. Well, even if I miss out here, right? Price could just do something like that, rebalance this move before going higher. I can catch this low hanging fruit right here, right? So entry, stop loss, low hanging fruit. Make sense? I don't have to catch everything. And I have to remember that. And I'm literally reminding myself right now, like, you don't have to catch everything. Okay. And I'm talking to myself. All right. So then that is done. We're done. If you needed to make 75 bucks from the day, you're done. That's it. You've made more than that. You would have made, at least that we know of, at least 230, right? 230 that we know of. Plus 100, let's just say 300, you would have made at least 300 bucks on this trade. And this is just a continuation trade to the way up, right? What do we say? Participate in the market. That's what we want to do. Participate in the market. Anticipate cost of doing business per trade, 280 bucks. I risk half of that. I don't want to risk my full position on here. I risked half of it. And that's okay. But I'm anticipating a cost. I'm anticipating this could be my loss. Right? So if I lost 150 bucks on this trade, it's less than my anticipated cost. I am doing business on a discount rate. Looking for a 2.5 or above, which we had here. This was 2.5, this was 3-1. And we committed to the trade and we managed it. 3.5 once, 2.5 took half off to break even. We didn't break even, but we moved. Let me change that because I think that's gonna. I don't wanna get so stuck. So stuck to that because clearly things could be totally different, right? What is this? Give me back to NQ. There we go. Okay, so I don't know why this isn't. Okay, I need to allow that for a second. Yep. I don't know why it keeps going to NDX. Save that. Boom. I think I like that better. Take half off and lower risk. We lowered our risk by taking half off. And then we moved our risk above, like higher. And so like that trade was a win. Whether we lost, it was still a win. And you can do that with a 101. So if you get to 101, take half off, move your stop halfway up, let the rest play out. Does that make sense? Does that make sense? Let me know. Guys, give me some of the give me some emoji hands. Give me some manipulation hands if that makes sense. So we took liquidity here. Now what? Now what? Now what? That is a question. Let's mark this out. We're gonna say, hey, we swept a high time frame liquidity. Did we sweep this? Yeah, we did. We've just swept liquidity. High time frame sweep. So there we go. Technically, technically this would have been a high time frame sweep right here. I want to see this is to me this is a better sweep, right? Because right here I don't see it on the 2 hour. So this is a better sweep to me. See that? It's very obvious. So I'm gonna mark that as a high time frame sweep. Now what? Okay, this is where we can start to look for shorts. Sorry, I'm getting ahead of myself. This is where we can start to look for a model to the downside. Okay, where do we want to see a model? Let's look at the 30-minute for a second. Let's look at the hourly. This is what we've been doing for the hour. We went from here to here, halfway, right? Right here, we're halfway. So halfway is right around this area, right? 23%, 38% around here. Do we have anything here? Do we have anything? Well, I see. Let's look at the 2 hour. This to me is a big breaker block here. Sorry, order block. 2 hour order block here. Let's look at the 1 hour. Okay, this is interesting. So we have a, let's mark this out. We have a 2 hour fair value gap, right? This is a 2 hour FVG. And then what do we have? This is where I want to see things kind of react from. Here is a 1 hour order block. So what else? Do we have anything on 30-minute? 30-minute order block is the 1 hour order block. Okay, this is we could see, I would like to see price come into this area right here. Maybe right into this area right here. This is where if we can see a model present itself to take us there, we might be able to get an entry down here. Maybe not here, right? We're not sure if we want to go there. Okay, where's our draw on liquidity at this point? Well, right now we got it up here. We got it here. We're ranging in the middle. We just took a high time frame point of liquidity. Can we balance, right? Can we balance this move? If we do, maybe we go to 50%. What's at 50%? The closest thing to this is right here. Okay, this fair value gap here, which also is the beginning of this 1 hour order block that is inside a 2 hour fair value gap. So just looking for reasons for price to go down, right? Now, why would price keep going up? Well, if there's big expansion moves, right, to the upside, we're at 940. So at this point, we are looking, so our macro starts at 10, or sorry, 950. So 950 to 10, 1010. Okay. Guys, there's a lot of crying going on, so I'm just gonna look for this model for a second, and actually I'm gonna grab something. I'm gonna keep the camera on. I'm gonna look for this model. Let's see if we find a manipulation move right now, manipulating on both assets, right, to go lower. Right here, even on the 5-minute, we have this this is a big wick that just happened. So what do I want to see us do? This is our initial sweep, right? So this is our initial sweep move here. All right, point of interest move. I want to see us manipulate, break structure, return to whatever we make. If there's a fair value gap or something, you know, start going lower into the midpoint of this move to rebalance if it shows up, right? If it shows up. Now, what would that look like? Let's see. Let's just say we manipulate up here. Where would our manipulation be in order to take us to at least halfway? Manipulation has to be this high. So can we get that? Can we get this manipulation, break of structure, pull back into this, right? Ideally into this this little fair value gap. I think this was the 5-minute. No, was that the 2-minute? What was this? 15-minute. See, that's even better. 15-minute FVG. Okay, so now we know. Now we know what we're looking at. Let's take these back. Okay, let's take this back here. And this right there. Let's get rid of this here. Let's get rid of, this is half, we know that's midpoint of that. We know we have that as a big order block. We know we have this as a 2-hour fair value gap. So I'm going to mark this as a point that I want to see. I'm going to mark that there. I'm going to mark this here. Okay. This is just places where I can see price react. And I'm going to keep this pretty small. Just want to be able to read what I'm looking at and why they're there. 15 minutes. So this is sort of my target here, right? If we go somewhere, this would be my target. Manipulation, do we have that? 5-minute manipulation is happening now. Are we getting in? No. Why not? We don't have confirmation. We can't confirm this move yet. Right? We can't. Right? We just like we couldn't confirm this. Sorry. This was also side note, but why did I take half of my position here? Why did I take half position instead of full here? Well, this is a full range. We were in, we went back into midpoint discount, fair value gap here, tapped into it to go higher. If I was just looking at this range, right? This is a 1-to-1 here. Or what did hold on, what did I get in? Oh, tapped into this range, right? Broke structure, got in here. This was our market maker model. So this was an overall, this was the same model that we're playing right now in a smaller time frame. Right? This was our first trade of the day, was a model on a smaller time frame. All right? What the heck is going on here? Okay. Odd. Oh, okay, I wasn't drawing. Okay. So, oh shoot. All right, so we had break of structure of this, right? We created structure, we broke that structure, right? Pull back into fair value gap. This was our entry to go where we could have gone here, right? This is still valid if that's what you're playing. But why go there? Like why stop here? Right? We had if at that point you have all of this liquidity, take it. Take liquidity. Take profits. Take profit here. And this becomes a 3-1. And that's a better trade. Like this is a safe trade here. This is a two and a, it's not even 2.5. So I wouldn't look to really enter this. This is a better trade. 3-1. Right? Ultimately we get that. Ultimately we get displacement to the upside. Right? Where are we? Displacement. All right. And then boom. Takes our take profit. Does that make sense? Okay. Now, if this is our manipulation move, what do we want to see? We still want to see us break below this. To go where? To go here, right? Could even go to this order block. Look, 2 and 2.5 are sitting right at the midpoint of that order block. Does that make sense? Let me know if that makes sense. Ah. So our first trade of the day was a win. We took that. Could have been a loser, and that's fine. I think another part is there's gonna be more losing trades that we get than winning trades. Okay. Just remember that we're gonna have more losing trades, meaning we're gonna have more losses of $280 than winning trades. There we go. Where is this NQ? Yeah. NQ, I want to see us pull below this. So this is our range. Midpoint of that range is there. I think a lot of times I would try to anticipate a move, but it's not what we're gonna do. That's not what we want to do here. Also, the power. I'm trying this PO3 candle here. This is just one daily candle, and that allows me to see where price open here. There was a reaction at price open, right? Multiple reactions at price open. You can see reaction, right? Break, reaction, higher, break, reaction, break, reaction, higher. So this is a good thing to have. Just to see where prices basically opened at. It allows me to also see our high. This is our current high, our current low for the day, right? So we're sitting here, right? Now we're sitting within, this is the high, this is the low of the day. And this allows me to just see that. I don't have to figure out like, okay, this is, what are we looking at, right? So this is daily candle. And what this tells me is we've been trading within this range here, right? This is the most of our trading activity here. Manipulation, right? Boom. And our current high. This is our manipulation move right here. Right? See this long wick on the daily? So this just, I don't know, I'm trying it out to see if I like it. See if I, because I'm typically trading turtle soups. I'm typically trading reversals and not necessarily stuff like that. So market technically would have opened. Market is closed right now, right? Please confirm if market is closed. Let's see. Yep. New York Stock Exchange, NASDAQ, and bond markets are all closed today. But futures, as futures, trade futures, and you'll be good. You'll be good. Again, what are we doing? Just sitting. And I think, okay, while we sit, this is like, we need to find something to do, guys, because sometimes sitting here is just not, it's not something I want to be doing, you know? Sorry, I'm just looking at this. Hold on, guys. I'm trying to mess with this light and it's not working. Okay. I'm trying to match the outside for a sec. There we go. That feels just a little better, right? Yeah, that feels a little better. I felt like my background was just way too blue. All right, what can we do here? If this is our manipulation move, if this from here to down here is our manipulation move, why? Oh shoot, we swept this. We swept high time frame sweep. All right, let's go to 15. We'll make sure. Let's go to the 4 hour. The 4 hour will tell us exactly where we're at. Let's get rid of all of that nonsense. We don't need it right now. We know that we have an order block. We know we have a 2 hour fair value gap. So we don't really care to see any of that stuff, right? We traded into consequent encouragement of this body, both of these bodies here. Okay, so you can see clearly, clear as day, we got a high time frame right here. We swept that. We just swept that. I still think draw liquidity is higher. I'm still pretty bullish. I don't think we're gonna see this go any lower right now. As it stands, I'd like to see us go higher. We just put in this 4 hour point of liquidity, right? We can mark that. So 4 hour. This is a high time frame liquidity here. We also have this one here. I don't think we'll see that yet. We could, but not yet. Low hanging fruit. Where is it? Low hanging fruit is right here. This is our low hanging fruit. So high time frame liquidity, and then we have all these relative equal highs here, right? So which one do I want to see us take? This one. This is the most probable. This is like the next one that we take. So let's get rid of this. This is the next one we take, right? When we take this, we'll take this one here. When we take this one, we'll basically take all of this, but we have to take that. That's our low hanging fruit from here to here, right? Because right now in between, there's nothing. We've already swept this and there's nothing else for us to go. You can count this even though we've already swept it. Again, where is our draw? Draw on liquidity at this point is right here. Could we go lower? Yeah. Why? We just swept the high time frame. Right? We came back down, we created this point, right? Let's not even look at that. We created this point, swept, right? Could we go lower? Absolutely. We could go lower. We could take this and retrace higher, right? We could take this, right? Come up here, boom, take this and go higher. We can come up here, take these two before moving higher. We could do anything, but right now, as it stands, draw liquidity for me is higher. I want to see us retrace this move. Let's look at this move for a minute. This move right here, retracement, look at that. That liquidity point right there. Boom. That could be something that we see, right? Where is this retracement here? Let's look at it. So let's go to the 5 minute. Let's get rid of this big red arrow. Retracement of this point is right here. What's here? Nothing on the 5. Okay. 30 minute. Do we have anything on the 30? On the 30 minute, we got sort of this sort of inverted fair value gap. We've got this order block body here. Technically, we would mark it something like this, but I'm going to mark the body for now. Right? Is this, somebody tell me if this is a valid breaker block. So what I'm looking at it is we break below it with this candle, right? Confirming it as a breaker block, right? Well, breaker block because we just broke right through it, came back down. Now we're trading inside of it. There's also fair value gap in here. This is an inverted fair value gap because we disrespected, went up. Now we're here. If we can run through this and take this point, then I'm looking for an entry. Looking for an entry lower. Where? Maybe this fair value gap. Right? Maybe this fair value gap. High time frame liquidity. You see, it doesn't look like high time frame. It doesn't look obvious on the 30 minute. But that's the candle that we created. This is this candle this is the 4-hour candle we're ranging in right now. So that's why I'm saying like this is the most probable one, the most obvious. This one not so much because it was just created. We could trade below it into this fair value gap before moving higher. Remember, this is a balanced price range because we have 2 fair value gaps inside of it, right? 2 fair value gaps. This is a bearish fair value gap, right? We came down, created a fair value gap, disrespected that fair value gap, moved higher. We created a new fair value gap on the way up. So these 2 overlapping fair value gaps are a balanced price range. So this is a good place that price could move into, right? Doesn't have to, but it could move into it. So again, we just wait, we wait. All right, now we have, here we go. Are we going to break this? Are we going to break this? Let's see, 15-minute. I mean, on the 15-minute, this is a swing low. This is a swing low, everybody. Here we go. So let's measure. Let's start measuring this stuff, because we can't anticipate it. Let's just measure it. So what do we do? Sweep on liquidity. Let me get rid of this. Let me get rid of everything. No, I have a couple liquidity points. Okay. What do we do? Sweep on liquidity. Where? This was our sweep on liquidity right here. Right. This was our sweep on liquidity right here. Sweep on liquidity. Right. Created what? A trigger point. This is our low. This is our trigger. This basically says, hey, we're going lower. A confirmation to the downside, right? Change of structure, right? Market structure shift, whatever you want to call it. It's the same thing. We literally, we were creating structure to the upside. This would confirm a change of that structure. This gives me better confirmation here. If I'm being totally honest, this gives me a like, hey, this is a no-brainer confirmation. We're going a little bit lower. This still, I would still count it. So, but this just it just makes me feel a little bit better. Anyways, we're here. This is our confirmation move to the bottom. Okay. So high time frame sweep, right? We come up, sweep that high time frame liquidity, come back down, put on a low, which is a confirmation point, right? Then what? We manipulate all of this. So basically anyone that went short and had stops up here is like just getting stopped out before the real move happens. And this is what we want to measure. We want to grab our fib tool, go from the top to the bottom, right, of that move. And we want to measure out where can we go? 1.5 deviations are right here. Where can we go? Let's look at it. Let's see. Let's look at the nothing on the 2, nothing on the 30. Okay, here we go. 30 on the 30-minute, 1.5. We have this top of the fair value gap. Is this range? Is this half? Okay, no, maybe not. Okay, I would be looking for 1 at this point. Why? Because we have a draw on liquidity there. It's not very obvious, but it's there. It's also half point of this move. So can we get in on this move with at least a 2.5 to 1 to take out this liquidity point? This liquidity point is halfway of this whole move. If then we can take half off and let the rest of them run into this fair value gap before moving higher. Doesn't have to do that. This 1 standard deviation feels more of a better entry if we do get one. So that's the game plan, right? That's where we're at. So now let's start measuring. Let's see what we want to do. So if we want to go short here, let's say we want to enter short in this fair value gap, put our stop here. Does this take us draw liquidity there? That's a 3 to 2. Or sorry, 2.3 to 1. I don't want this is a 3 to 1 here. If we get in on this. There's our break. There's our break. If okay, there's our break here. So at this point, we still wouldn't have gotten in here, right? We know where we want to go. So let's get rid of that. We know where we want to go. This is our manipulation move up here. We established that already. Boom, manipulation hand. There we go. It's manipulation move. Boom, sweep, trigger, manipulation, break of structure. Now I want to see us move to the downside. So what can we do here? What can we do here? Draw on liquidity. Remember, this is the 4 hour. This is a 4 hour draw on liquidity down here, right? We could take that. This is also halfway point of this whole move, right? This is halfway point of that whole move. And why would we go? Why it'll be safe to go halfway of this move because I still think our draw is higher, not lower. But we can still play this stuff. Right? We can still play what the market tells us. So I'm gonna create an order here, a limit. Oh shoot, what is this? Yeah, I'm not doing this. So I'm gonna play this on MNQ. So let's say we go in here. This here, draw liquidity is, what did we say it was? Right here. Right here, draw liquidity. That's a 3-to-1. Great order. And I feel good about this. So I'll sell this, right? I'll sell this on MNQ. Look at this. We're dropping at this point. And now this is on a macro. This could just keep going. So we probably just missed that. This could keep going. We would have missed that. Now let's look at it on a higher time frame. Boom. This is I believe this is called a Judas swing, right? Goes up, then comes right back down. Yeah, I like this. So on MNQ, my entry is 62925, 629, something like right there, right? And I'm gonna go with 5. I'm gonna go with 5. Stop loss is right here, right? Is that what we say? Yep. And take profit would be down here, but I'm not gonna do that yet because if it drops and it decides to take profit, it'll just fill me. It's not even a take profit. I wish you could do bracket orders, but you can't. So here is our sell limit. So if price reaches here, and we'll get filled. Stop loss up here. Once we get filled, we'll put our target, which would be down here, unless we hit that right now. So just sitting back, letting it do its thing, right? Let's see. Let's figure out half the midpoint of this range is right there. Okay, what does this tell us? Can we get in? Can we get in here? OTE is right there. Our fill would be right at OTE, so I'm okay with leaving it right where it's at. So my fill is gonna be, you can see this right here. My fill is right there. Stop loss. Yeah, 2.83 to 1. I'm okay with that. Currently, as it stands, that's OTE First point of OTE, optimal trade entry. Do we need a filter on now? Probably. Now we just sit, we sit. We participate in the market. We anticipate the cost of doing business, meaning your risk. We look for 2.5 to 1 trades or above. This would be a 2.5 and or above. And then we manage our position. Easy, right? Easy. And I think I just need to I need to remember that, and I need to follow that. And I need to just stop focusing on this number, what the number is down here, and just make trades, right? Just trade. That's what we're here for. Just trade. We're just trading. That's all we're doing. Fair value gap there. I don't know, kind of 15-minute. I mean, this is I'm looking at this as a huge 15-minute order block. I would probably put my stop. If I do move this up, I am putting my stop. I would put my stop maybe like 1/3 of this whole thing. Right? So if we I'm just talking out loud, but if I'm considering getting in a little bit earlier, get in here, stop loss here. Get in here, stop loss here. See what this looks like. Okay, where are you? Here we are. Nope. Where? Come on. All right, clearly. Here it is. Oh, it's locked. That's why. So let's just say we move our stop loss to right here. And then our entry to here. This is a 3.6721. Not bad. Not bad. I think that could work too. I think that could work. We would be above halfway of this. What's half of this? Yeah, we'd be above half of this wick. I think I like that a lot better too. Just a little bit more of a opportunity, but I think we missed our train at this point. Price just took off without us. All right, we just swept an internal point of liquidity. Internal point swept. Do we want to go? Where do we want to go? What do we want to do? See, now this is this inducement of this? Because we had this sort of tap into this fair value gap. Then boom, boom. Let's measure this move, this 4 hour. This is half OT. This would technically, I mean, fair value gap. Nothing here, nothing here, nothing. I would I want to see us right now. I want to see us go up there, right? Like that would be sort of a pullback. And here, that's 2.5. 3 up. We would have gotten, oh gosh, yeah, we would have gotten stopped out. And I'm just looking, right? Like a way to get us up here back into this fair value gap on the uh yeah, on the 5 minute. Like, is there a reason for us to go up there right now? Right now, price is just dumping, so I'm just looking for a reason to get back up there. We already had this manipulation move. We had no entry to the downside. Yeah, literally no entry. It's just displacement all the way through. There's a big displacement candle to the, yeah. If we take this liquidity point down here, then I'll look for a model to the upside. At this point, we missed this, so let's get these orders out of here. Yeah, let's get these orders out of there. Does this make sense? If this makes sense, please let me know. Yeah, this is making things not. Yeah, if that makes sense, let me know. That's what I'm looking at. That's what I'm looking for right now. So set alerts too, you know? If you're like, man, I wanna I wanna get up from the computer, which is what I'm about to do. I'm gonna let this play out. I'm gonna put it here. I'll text. Because if I get up and I'm not here and people are joining, then I'm gonna put waiting for this 4-hour liquidity to be taken before looking for an entry. Okay, so it makes sense. All right, great. So this is, and guys, like, full transparency, I'm still learning. Like, I'm still trying to understand a lot of this, right? Like, I started this diving into trading about back in the earlier this year. And I think just like most of us, just learning support resistance and trying to figure out how things move and work. But after I found ICT, it just, to me, it opened up a world of understanding why price moves where it moves. It made a little bit more sense than just support resistance, trend lines, etc. Anyways, so we're gonna wait for this to be taken, this 4-hour that we put in, right? And I wouldn't say it's necessarily a swing, but it's definitely a point of interest to me before moving higher. I want to see basically what happens here. If we have any model presenting itself to move higher, or if there's a model that kind of gets created to move even lower. I was listening to, I think I brought up one of some of the music I was listening to. When was this? How do I do this? Window. I was listening to RYX, and I said, this is probably one of the best stuff, like some of the best stuff to listen to when you're trading. It's just so relaxing. And anyways, it's this right here. RYX and London Contemporary Orchestra. It's a great album. Go check it out. There's one in I think it's on YouTube too. It's a great, like, just to watch and just sit there. It's pretty awesome. Anyways, that's what I've been listening to while we trade. So I'm gonna set an alert here for a second. I'm gonna grab something to drink. So add an alert. Boom. And you can do this too. Add an alert for yourself. Go hang out with family. Go hang out, do something, right? You don't have to sit here on the charts all day. And that's what I'm trying to get to. Session breaks, trading. Alerts. Do I see alerts anywhere? No. Edit. Place out. No. Send email. No. Notify an app. Yeah. Should toast notification. All right, whatever. I set an alert here at this 4 hour sort of low point before moving higher. And if I was out, like, let's just say I was out with family doing things, so I will later, but I have the ability to trade now. I would set an alert maybe up here, right? So set an alert here, and I would set an alert down here just before this point, so that when it does start to come up here, I have the ability to see it sweep, create manipulation, right? Distribution to the downside, break of structure, give me a fair value gap into my entry, right? Measure that to just get in, set my stop loss, forget it, and keep going about my day. Yeah, thanks for hanging in here. Hope you have an awesome Labor Day hangout or whatever you do, wherever you're at. It's I'm excited for today. It's gonna be beautiful hanging out with family, but I just wanted to hop on here too. Just there is trading opportunities. There's no news today, obviously. Market is closed, but you can see there's trading opportunities and things are still moving. You saw this huge displacement to the downside. So it just, even if the market is closed, even if there's not enough participants, if you will, we still have the opportunity to make money, right? So just keep that in mind. Have an awesome day. If you are, let me know what you're doing. You don't have to let me know, but just have a great day. I'm gonna be hanging here for a little longer, maybe 30 more minutes, and then I'm gonna call it a day so I can hang out with family. But that's I'll probably take one more entry if it presents itself, and then I usually hop back on, not live, but on my own time. I hop back on in the afternoon session to see what happened during lunch hour, and typically there's either a reversal or a huge displacement to where I want to go, and I'll take an entry there. But boom. Oh wait, that's wine glasses. Let's put some beer. I don't drink beer, but cheers. All right, I'll be back. I'm gonna get me an energy drink. Okay, so Justin, great trader. Let's see. Um, he plays this game. I made an account with this, anyways. Let's guess this. It's called Time Guesser. We're gonna have our chart up here. We're gonna have our chart here so we can see what the heck we're doing. All right, Time Guesser. Basically, it's just a game where we need to figure out where there's gonna be an image. This image, we need to figure out where it took place and what year it took place. So we'll play this for now. This is London? No. Yeah. Where is this? If you have a guess, let me know. Where is this? Okay. What are they wearing? Okay, what are they? Man, I don't know. All right, we have some displacement in the 5 minute. Hold on, let's take a look here. So what happened here? Oh, okay, big displacement. This would be so yeah, doesn't know where it wants to go at this point. Yeah, there's nothing that I would want to really take here. Yeah, really nothing. Yeah, you can come through. So this is where I still sort of this is where I would use the theory of trend lines and stuff and like levels to figure out, okay, this is sort of a reactive level, but I need to figure, if I don't know, if I can't figure out why, I'll just draw something like this real quick and see these react, right? From here to here. Sort of this area. If I can't see a reason why it's reacting like that, I'll just do that. And there's really, for me, there's no entry. There's no entry for me here. What do we see? I don't see like an obvious point of like of a reason for it to move there. Huge wick. 30 minutes. Oh, okay. See, this is after. I don't see this beforehand, but this is afterwards. There's an would this would be order? No, yeah. Maybe this is an order block here. We also have this breaker, right? Basically, an inverted order block becomes an order block, gets invalidated, trades back into it to go higher. And I'm just sitting here watching and trying to figure out you know, why did price move the way it moved? Not necessarily trying to catch any of this right now. I want to basically what we saw here, right? This play. I think we caught this little bit of the move right here, but we did it with a we did it with a model in here. Actually, we caught this move right here. This was the move we caught. We did it with a model, right? This model inside of here to go here. And there was a reason for it. Yeah, this is just huge displacement. Huge displacement. For me, like, there's no entry here. It just keeps going. So far, this breaker block was the sort of my reasoning for why price went there. All right. Let's see. This would be, this whole thing is the order block. Or the breaker block, sorry. On the 30-minute, it would be from, yeah, I guess. On the 30-minute, it's a little bit lower. On the 15-minute, we have these two candles that create that breaker block. Right? Just like, no. Yeah, this is just a big displacement move to the upside. I think we might have this was just literally a rebalance of this move. Bless you, bless you, bless you, bless you. Jeez. So if we look at this, right, we're really, yeah. There's no entry here for me. This is where I would typically get sort of a FOMO move, right? And then I would start trying to like get in and get stuffed out and get in and get stuffed out, get in and get stuffed out. But there's no reason here. And I'm talking and I'm saying this out loud so that I can hear, hey, there's no reason and it's fine to not catch this move, right? And if there was a reason, let's look for it afterwards. Like right now, my reasoning for this is we had a breaker block here, right? And a breaker block is basically just an inverted order block. This, I don't know that I would count as a order block, right? It wasn't, it was going to the direction, just came down a little bit. This was direction up and then dumped. This feels like a better order block to me. I would count this as my reason for why price went there back up. Is there an entry here? I mean, it's a risky entry. It's a risky entry for sure. If you, let's just say you enter at the top or even at the body of that order block, right? You don't have a target per se. Go below that just to take. Where's your where do you want to go? Maybe this is your target here. That's a 2-to-1. That's not something I want to risk to enter. All right, we just swept new highs here. So now what? Let's get rid of all of this. Here is an obvious point of liquidity here. This is an internal. Where are you? Internal. internal sell side, and it's so it's sell side because there's sell stops here, right? So you buy and you sell a stop here, and then it's buy side up here because you sell and then you have a buy stop, so buy side liquidity. So sell side liquidity, buy side liquidity. This is internal. I need to internal sell side liquidity. We're gonna make this. Let's make this. And we're gonna make this orange. Save as internal SSL, internal BSL. Save as internal BSL. Yeah, remove that one. Remove that one. So this is internal sell side. Okay, we can find our external range on a higher time frame. So meaning right now this is external, right? So this could be hold on, I'm trying to figure this out. I'm gonna rename this to external buy side liquidity. And we're gonna do the same thing here. This is external. Basically, this just tells me this is our range. External SSL, save as external SSL, sell side liquidity. Okay. Boom. Okay, so let's get rid of this. Yes, I want to get rid of that. I want to get rid of this. I want to get rid of this. I'm going to move that. Here's our daily too. Okay, it might be actually really wise to just find your daily liquidity points, right? So if you are looking at daily points, then we can say, okay, this just got swept. So this was a high time frame sweep, right? And we can even rename it so that we don't forget what this was. Daily sweep. Okay. Then you can come up here, draw another line. This is your external at this point. External sell side, right? Because we buy and then you have a sell stop here. So this is all sell side liquidity. This is external buy side liquidity. So this is our range at this point. Okay. You can go weekly and have that range, but I don't think we're not there yet. So I think a daily range would be fine. We just swept this, right? So this is basically like once we sweep a high time frame, especially like a daily, we could look for a reversal, right? Not necessarily a full reversal down to external sell side, but maybe a intraday reversal to a um, uh, mean threshold of a specific, you know, PD array, like a fair value gap, or here's a volume imbalance from here to here. Really anything that gives you a reason to go lower, but not necessarily all the way down here. Right now, our external is still here. We have equal highs here. I want to see us take that out. and we're heading that way, right? We created this, couldn't take this high, couldn't take this, or actually we did take that, but came back down, took this daily today, and this is what we're trading. I think we're gonna see this taken out before we do anything else. So, but it's always good to just mark this stuff, right? So here's our daily of today, and I'll mark this because it would be the next point that we sort of take. This is our current range. Let's go to the 2 hour. So obvious points, right? We're looking for obvious points to figure out where we could go. Draw liquidity right now. I think it's right here. So look at this external. These are 2 points of liquidity. Just this is a magnet for price at this point. We also have a fair value gap up here we could draw into, right? So there's more reasons for us to go higher than to go lower. And this is what we've been seeing. We've been like right here. I was like, we have equal highs here. Didn't take them at all. Failed swing, low. Took this, right? Boom. I thought we would take these again. We took this one, failed to take that one right there. Boom, failed swing. Right? And it's literally just creating a magnet for price at this point. um I've been keeping an eye on gold. And from market open, it's just been ranging in here. I have an alert here, an alert here. This is an alert for a fair value gap. So if gold decides to move in here, then I'll know. If gold decides to move below this, I'll know too. So I don't usually play gold. I stick with NQ, and I just watch ES, but NQ is basically what I stick with. NQ and micro NQ. So ES has just taken these. ES just took, well, yeah, NQ took that too. ES took this, NQ has not. So at this point, we are currently sitting on an SMT between these two assets. I'm gonna go with I'm gonna go like this. So we have an SMT here from right. Hold on. Yes, I need to see this one. Here we go. No, ES here, NQ here. Yeah, right now we have an SMT from, we're going to keep moving higher, but maybe we'll create some sort of SMT here. But again, I think our draw is up here, so we'll probably continue higher. Can we play a continuation move to the upside? I don't know. Things are it's just moving. Like this is it's just going. So we rebalance this move here, right? 38%. rebalanced. I think there was we said there was an order block here. We just swept this. Now we're looking for this up here. This was our daily sweep on liquidity. This place above it. Right. What do we want to see? We have this sort of breaker. Breaker because it was an order block. Disrespected. Maybe we see it trade back into it. Right now, 50% of this move is right here at this fair value gap. This is a 5-minute. Let's look at the 15. Huge fair value gap there. I don't care to see. Yeah, I think if we're gonna play this, it would be that order block there. This right here. And this is just a continuation move, right? I want to see, let's see if we can participate in it. If there is an opportunity here, but let's figure out where we want to go. This right now is a 3 to 1. I would feel if we took it here, if we took it right at midpoint, I would probably, yeah, take it right here. Right below. I would move it. Yeah, stop loss right below this. Because at this point, if this is a breaker block into a fair value gap, like we're seeing right now, then there should be no reason for price to move back here. And we'll just continue higher. And this is a see, I would play MNQ on here because this is more than my anticipated risk. MNQ, here's our draw. Right here. This is external. Right there, external. And we're looking for an entry here. Midpoint. Right, we come in at, let's just say we come in at midpoint. Stop loss is right here. Right, target here. Technically, this is the breaker block here. So the only way that I would probably get in here, I'm gonna go with optimal. I'm gonna go here. Can we get us down here for a 3 to 1? That would get us below this candle here. This is probably the only way that I would take this is if we trade below down into here. If we miss this, we miss this. All right, so this is 6 contracts. We're gonna take 6 contracts at. I'm actually gonna do. I'm gonna do 4 contracts on this, and then I'll add if we do move. Which I don't think we will, but see what happens. It's 5 minute, 3 minute, 2 minute, 1 minute. Okay. Let's just wait. I don't think I'm gonna get in on this rope. Not yet, at least. It's a 3 to 1. So basically, if my entry is, so my entry's here, right? This is our 3 to 1 move. Okay, if my entry's here, see, I would have to put my stop loss here. I think this is better. I like this better. Because there's, again, no reason for us to come down here. Right? We have a, oh, hold on. Balance price range here. We have a, do we have a breaker? This is, no. We could see us trade into this too. So we have breaker here, a full breaker, right? These 2 candles. Then we have sort of another breaker. So I would be okay taking my stop loss to here. So if I do that, let's see. If I take this stop loss up here, right? My entry, then this is my entry here. Maybe. Let's see if we can find a small model to take us lower. Maybe a 15-second model. Let's get rid of this for a second. Can we find a 15-second model to take us lower? We've got a swing here. Got a swing here. Got a swing here. Got a swing here. This is this could be our confirmation. So this could confirm our move to the downside. All right. This becomes our our manipulation here. Let's measure that into fair value gap, right? What's in this fair value gap? This is our breaker. Right, we have a nice breaker here. I think I'm. This is a breaker here. Technically, this is the breaker. I would probably take this into here. Stop loss to go higher. Yeah. So we know this is our 1.5 standard deviation. 1.5. I don't know how to say it. Yeah, I think that's it. Okay. So if we have that there, let's calculate this for a second. So let's just say if we want to go lower. Stop loss here. Can we get entry? I would like us to move into here to get there. So let's figure this out. Let's say we get here into here. This is a 4 to 1. I'd be okay with taking this one. 4 to 1. If we can confirm this lower, which honestly I don't think we will. I don't think we'll confirm that. No, we didn't confirm that. No, we got an SMT here. Here's no, it's not an SMT. And honestly, today it feels I feel good about the trades that we haven't taken, and I feel good about the trades that we did take. There was a reason behind it. There was models created. There was confirmations that we went on, and I think we talked about this on Friday on just how do we get better every single day, and just doing all of these things, right? Participate in the market. Don't be scared to participate in the market. How do we do that? By anticipating a cost of doing business. So we already know that we don't have to be scared to be inside of trades as long as we know the cost of the trade. Right? So calculate that according to your account. Figure out what you need to do. So if you have a capital, right? If you're trading an account and your capital is not your account size. Your capital is going to be your max loss or your daily max loss, right? So if your account size is, let's say $50,000, your actual capital, your tradable capital for that account is around 2,000 or 2,500. So that's all you have to trade, meaning figure out how many trades you can lose in a row, right? At X amount of price. So let's just say you can lose 20 trades at $100 a trade if you're in a $2,000 account. Great. You already know the cost of doing business is $100 per trade, right? Figure out how many trades you're willing to lose a day. For me, I believe this is 4. So $400 a day. I don't know. That sounds pretty good, especially if we're looking for great entries, right? Look for 2.5 to 1 trades or above, and we're going to commit to a trade and we're going to manage it. And we're going to be really flexible with our trading. This is crucial. This is important, right? I know my cost. I know the cost of doing business. I know what I know what to anticipate. Therefore, I can get in a trade, I can execute, and I can get out. Right? I do enjoy this. I enjoy trading. I enjoy being here, sitting here on the charts and figuring out, does this work for me? Does this not? Should I take it? Should I not? Why should I take it? Why shouldn't I take it? Like all of this reasoning and trying to figure out and understand, it helps me. Man, we totally just missed all of this game stuff, but whatever. It helps me realize and understand that I don't have to trade every single day, or I don't have to trade every single up and down, up and down. I can. There was no confirmation here, so I'm not taking this. This is not going down yet. At least it doesn't tell me it's going down. Instead of trying to anticipate the market, I think me not having, whoops, we're frozen, y'all. We're frozen. Oh, we were frozen. Me not having a, me not having this, a cost of doing business per trade, made me feel like I needed to take, made me feel like I needed to anticipate or predict a move, and then I'd get stopped out, right? So like, I would say, oh, this is gonna break. I'd get in here, put my stop here. Didn't break, stops me out. All right, well, that was a bad trade, honestly. Like, let's just say even if I was like, yeah, I'm gonna minimize my risk, right, by getting in early. Let's just say we get in here. Let's say we get in here. Sick. We're in. What's our risk? This is a 6-to-1 trade. Sick. Okay. This is a 6-to-1 trade, okay? Well, what happens when I lose it twice? This becomes pretty much a 3-to-1, right? It's the same trade basically. Right? Cuz look, if we're here, right? If this is our entry for this one, if it broke over and this was our entry, and we had this, let's just double this. Now we're risking a little bit more. Just because we try to anticipate it. Let's just risk all of it at once, right? All the trade of the cost of doing business, let's risk it up front, and let's see if it plays our way, rather than try to catch it and get stopped out, right? Catch it, and what if we get stopped out here? That's already 2 losses with no confirmation. Why? Just to try to catch a move. Makes sense? There's our confirmation here. There's our confirmation here. Great. Now what? Well, we can let's look for an entry here. Do we have an entry? Let's see. Do we have an entry? Let's see. If our stop loss is there, our target is there, 3-to-1 is here. This is our entry. I like this. Doesn't mean we're gonna go to it, right? I like the odds of this. 1.5. Yeah, I still like this. That takes us to that fair value gap. Okay. But I would say this is our manipulation move, right? Confirmation move. 1.5. I like this. I wouldn't risk all my size. I'd probably go half. So let's do that. We're going to go here into, what is this? This is our entry. This is our risk. This is our take. What is this? Get out of here. Create limit order. So what if we take 8 contracts? Let's take 8 contracts here. Okay. So what is 8 contracts? 40? Right? 40. We're gonna go at 16, 65925. Yep. Stop loss right there. Okay. 6. Yeah. Stop loss, take profit. It's gonna be down there. I'm gonna add my take profit as soon as we get filled into this. Okay, as soon as we get filled, I'll add my take profit. We're just looking for this pullback here. If we get filled, we're not gonna force this. Right, instead of anticipating it, we're just gonna wait. And just calculating. If you want this fib, I basically made it so that I can create let me draw this out real quick. This is a 3-to-1 move. And basically with this fib, with these settings, I can take a point of entry, right? If I want to enter at a specific point, let's just say this moves up here. I want to enter, let's just say I want to enter at, let's just say this is a breaker block. I want to enter in the middle of it. Okay. Where's my profit? Where do I want to go? Well, I want to go to 1.5 deviations. Then I can enter here, know where my profit is, know where my stop loss is for a 3-to-1 move. All right, and then I have this 1.63, which is half of my risk off the table once this moves to 2-to-1, right? So if you look at it from here to here, right, is my risk. From here to here, and then from here to here is basically 1-to-1. So I'm risking 1 to make 2. All right, we're in the trade. And again, I already know my risk. I already know what we're doing. So this could stop me out right now. And it looks like it's got some strength to it. So there we go. It stopped me out. But we had a plan. All right, we had a plan. We had an intermediate sort of break of structure, what we're looking for, just to take us right down here into this first point of interest, which is this fair value gap. Didn't have to take us there, right? It doesn't have to do what we wanted to do. We didn't go full size. We kept it pretty pretty small. What did we do? We did 8 contracts. No, not ones. So it's a $92 loss there, right? But compared to our cost of doing business, right? This was not a super high probability entry because we had already swept, right? And we created this big move. I was looking to rebalance this move here. Boom. And maybe just that wasn't it. Am I going to be scared of entering again? No. If the move presents itself, I'm not going to, yeah, I'm not going to be scared of it. We're going to participate in it. We're going to be participants of the market. Okay. We observe, become participants. That's actually a good one. Let's add that to our to our words of wisdom, I guess you could call it. Boom, observe and participate in the market. That's what we're going to do. We're going to observe and participate in the market. All right, now let's see. Where are we at? Dude, this crap needs to stop. It literally just takes me to NDX or whatever. Mm. 5-minute time frame. This has now become a swing low. Okay, on the 5 minutes. So if we break below, we could see a temporary structure, break of structure, into to rebalance this move. Where do we rebalance this move? Let's see, consequent encouragement of that is right there. Okay, or midpoint of this move here, right? Midpoint of that is right there. So pretty similar. That's still want to see us trade around here. So maybe trade around this inverted fair value gap, right? Breaker block, inverted fair value gap, big fair value gap. It's a point that I would be interested in watching. I hope that makes sense. I hope that makes sense. Let's go to the 15-minute. What do we have? What do we have here? We have a small small fair value gap here. This is a 15-minute fair value gap. Okay. Do we have anything on the 30? No. Nothing on the 30. Two trades so far. One winner, one loser. We have to be okay with that. Now, looking at this on a higher time frame, let's look at it on the let's look at it for a second on a let's look at it for a 5-minute. Okay, on the 5-minute, let's take a look at how this could play out on to the downside. Okay, we got this curve. We got the buy side of the curve here. Right? Generating what? Generating liquidity. Right? This is all liquidity. Because we got to look at it this way. Yes, even though we know that the draw is up here, what could happen right after this, right? We could go higher for sure. We could go higher. But it's kind of, you have to remember, like we have all of these points here of liquidity that doesn't have to take them, but it could do something, right? Low, higher low, higher low, higher low, higher low. We just swept this, boom, right? Let's just consider. Let's consider this. Let's consider this as a manipulation move. Let's just consider to see where we could go according to this move. If we break below it, right? And if we do, like if we start to change structure, where could we go? Okay, around. We could take this, right? At 1 standard deviations. 1.5 takes us around here. We have sort of this order block here that we haven't traded into. All right, so we have this we could possibly trade into. We have a fair value gap here. I'm just looking for reasons for price to come down here. Fair value gap there, right? And then ultimately we have a point of liquidity around 2.5 deviations. Okay, let's look at the 1 hour. On the 1 hour, we don't have a fair value gap. We do have this breaker block here, or order block, in the 1 hour at 1.5 standard deviations. Okay. To me, we could take this low, put in more of more of a structural low, right? So something that makes sort of sense, right? Like right here, even if it's maybe we don't take it, but we put sort of a structural low, right? Like this wasn't a real, this became the structural. I don't know if that makes sense, but whatever. And then even if we don't take it, at least come down here, breaker block or order block, right? Or into this breaker, taking it out. It doesn't matter, but we'll see what happens. Or we just don't do any of this stuff. Is there inducement anywhere? No, not really. Fair value gap on the 1 hour. It got respected. We also have an inverted fair value gap here. 1 hour. And got traded into. It just wicked right into it too. So we wicked into that 1 hour inverted fair value gap. Just looking for reasons. Looking for reasons. We take this out. And this is what we could do, right? Because I do have a feeling we're gonna take this. Again, external. I'm gonna make the externals a bit thicker so I can see them a little bit better. And then the internals, I'll keep them. So internal sell side. And then this is where we're at now. So now we just watch and wait for, let's see if that external gets taken. And when I say external, like it depends on what time frame you're looking at. You don't have to be, let's just say let's say you're a swing trader, right? And you're trying to find an entry on the 1 hour or 2 hour. This might be internal for you. Your external might be on the weekly, right? Your external might be up here and down here and up here or whatever, right? So right now your external might be here and here. All right, and then you're just looking for an entry here. Make sense? So right now, even if let's just actually, I'm glad we moved into this internal external conversation, because at this point, this is technically this is still going lower. The only time I want to, when do we want to see us start to go higher? As soon as we break these highs. As soon as we break all of these highs here. This external, and for me, this external, right? I want to see us break these highs. What's that going to cause? That's going to cause a market structure shift, right? In a higher time frame. That's going to take us. Let's see where it could take us, right? So this is this side of the curve, right? If you look at it, we've been doing this. So this is that side of the curve. This is where we're at. We created this market maker model, right, to take us down here, and just as we anticipated, right? So we take the manipulation of this into that. This is manipulation leg, takes us 1.5 standard deviations into this fair value gap. We hit that fair value gap. We fill it to move higher, right? If we get a move higher, I want to see us displace above this, maybe into that fair value gap for a pullback. Where could we go? Right? If our manipulation move is this, confirmation is that, right? This is our manipulation move. This is our confirmation right here. It would be, technically would be this. We didn't quite get it, so I'm not looking for an entry here. This isn't really what I want to see. This is our manipulation move. This is our confirmation move here, right? Let's just say confirmation. Okay, that's our confirmation. All right, because we put in a low, right? Confirmation here, manipulation. So let's measure from the bottom to the top of that manipulation move, right? That confirms our market structure. 1.5 standard deviations takes us to this high time frame fair value gap, right? Look at 2 and 2.5 take us to this all-time high. And we talked, even if you were here, we talked about this. We talked about us wanting to see us move into this fair value gap on the, I believe it was on the daily. Yeah, so we want to move into this fair value gap on the daily chart for NQ, and on ES, we want to move to take these all-time highs. That is where we want to go. So our point of destination for ES is here. Point of destination for NQ, right about here. Does that make sense? And there's a reason for that. And we talked about it. If you have questions, let me know. Sorry. If you have questions, let me know in the chat. But there's a reason. And we're looking at it right here. We are on a, let me make this a little bit of a full screen. We are on a buy side of the curve on a market maker model, right? This is one market maker model right here. Right here. This is a complete market maker model. Right here. Okay? Don't look at this right now. Don't look at that. This is a complete market maker model. Okay? Buy side of the curve, right? Market structure shift right here. Boom. Sell side of the curve to our destination. At the same time, while the sell side of the curve is happening, right? We're generating liquidity, all of this, to move us into a buy side of a new curve, right? Buy side of new market structure
or a buy side of a model. Are we going to break structure here? Is this, so this becomes, now I'm looking at MNQ on a 1 minute. I'm just watching this. It's breaking structure. So let's take a look at that. We could find our entry here for to rebalance that this whole move that we just made, right? So let's go look at that. If you have questions on how we arrived on our destination for NQ and ES, let me know so that we can answer that together. And if you have a different like observation on that, also let me know. 1.5 standard deviations takes us to here. Okay. And I'll play this. I'll play this for sure. Let's see. So if that's 1.5 standard deviations, I'm going to mark 1.5 standard deviations here. 1.5 standard deviation here. From here, I'm going to grab this fib tool. I'm going to take it to my destination, which is 1.5 standard deviations. And I'm going to find my entry point, which let's just say I want my entry point to be, yeah, I'd probably take it to right there. So this is going to be a little bit more of a, more than a 3-to-1. If we get a pullback, it looks like it's going to run without us. Did we have entry? I mean, we kind of did here, but this was our confirmation here, right? This was our better confirmation to go lower. Maybe we, yeah, I don't know. Let's see what this would look like. This is a 3.6 to 1. I would still go with half size here. Wouldn't go full. This is on NQ. Let's go to MNQ. Yeah, I wouldn't go full here. I would go, I think we said here, right, to our destination, which our destination was somewhere around down here. Let's just see what this yields for a moment. This is a 3-to-1 at this point here. Move our stop to those highs. And we know that this was a 1.5 standard deviation, right? Do we have ES and QES? Okay, there was no. Okay, maybe not. On the 3 minute, this became our point of interest. This became our manipulation move here, right? Boom, down to 1.5, which is also inverted fair value gap on a fair value gap. Okay, we also, now this is something to keep in mind. We have an order block here. Order block. Right, I mean technically it's that, but I don't want to see us break this. So order block, fair value gap. this could be a reaction point. Maybe we can see if this wasn't much of a clean. Yeah, there's nothing here, so I'm not, we didn't sweep any highs or anything. We just moved into this small fair value gap. Yeah, we moved into that fair value gap to go just a reaction. Maybe we see a reaction here in this breaker, right? In this breaker, in this fair value gap. This to me might feel like a better trade idea. This is a 2 hour. No, 15-minute. I don't know why it was 2 hour. 15-minute. 15-minute into a, do we have a 5-minute? Yeah, 5-minute into a 5-minute breaker. So we could look for a model in here, right? And just to take us higher if our draw is up here. If we see another small model like we did before on our first one, then we'll take it. We're so close to that too, so like yeah, it just makes a little bit more sense. This is our risk. So even if we move down here, let's just say we move to that midpoint of that fair value gap. This is still like this is still a trade that I would take. Right, 3-1 here. My stop loss is there. Heck, this is one that I would take too. I don't think it'll go down here, but hey, oh, here's, so this fib tool, these are my settings. If you want them, screenshot them. Let me know if you got them. Basically, I just measure uh, from my entry where I want to enter to my destination, and it gives me, it calculates this for me. Basically, I can visually see it, and then I can, if it looks good, then I'll go ahead and I'll start creating an order and see what that looks like. So it's just like predetermined. It's a predetermined risk, and I'm just visually seeing if it makes sense, right? On a 3-1. So if I'm going short, for example, let's just say I was going short here. My destination, let's just say I want to move into to the middle of that fair value gap, right? And let's just say I enter right now. Like, all right, I want a 3-1 and I want to enter now. Does this make sense? Uh, Stop loss is up here. That would be sort of a market structure shift in order to get here. What's here? I mean, this is inside a, I think this, we said it was a 3 minute, 5 minute breaker. This is more than halfway point of that breaker. Maybe this makes sense, but I don't know that I would take this. Right? This would be a retracement of this move. Do I want to play this retracement? You know, and just, it just helps me see it a little bit better. 50% of that move is down here. This could make sense. I would not take it with the full size. Just because we also haven't, it hasn't given us a solid, you know, entry. It's just kind of moving down on its own. Yeah. But that's what the tool is for. That's what I would use it. So let's just say we're like, all right, well, I want to, if I stop out here, where's my 3 to 1? My entry's here. That's pretty good. Maybe my entry would be right here. Yeah. This is doable because, all right, cool. Right? Does that make sense? But because our draw is up here, if this keeps moving up, it could just go straight to our draw. So maybe waiting for it to move into this area here that I marked. Wait for a model, look for an entry, and go higher. So let's just say you get an entry here, you go higher here. Boom. Here's your 3 to 1. So then you can calculate and visually see where your risk is gonna land, right? And it's like, does this make sense? Maybe, maybe not. It is below the breaker. This could make sense if you're confident in that breaker to go higher. The only way I would be confident in this breaker is if we see a model, right? Break of structure inside of this model to go higher. I'd feel comfortable inside of this breaker, right? If that makes sense, give me some manipulation hints. HAMSA. That's how you find this. That's how you find it. Yeah. Hamza. But yeah, if this still makes sense, let me know. I just wanted a quick way to visually see my 3 to 1 risk. It also helps you manage your trades, right? So let's just say you get filled in here, risk here, your trade starts moving, goes to 1 to 1, okay, goes to 2 to 1. We take half our position here, move our risk here, and now this becomes a de-risked 3 to 1 trade, right? So we're managing our trades. We have reasons to move it. We have reasons why, right? So you took profit already. You're letting the rest of it run. You're building your account. We're minimizing our risk. We have everything that we need here. I want to see more structure get created here. Okay, I want to see more of this get created. Maybe a nice, boom, and then break of structure, entry, and maybe this takes us a little higher, break of structure, back in, boom, break of structure. And this is what I want to see price do. All right, something like that, eventually getting us there. That's why we put our stop loss down here. Because we're going to trust that it's not going to get broken if we see a break of structure, if we know that we want to go up there, right? Now, it wouldn't make sense for us. Like, I think another way to look at this is, okay, let's go to the 5 minute. Another way to look at this is basically just looking at how structure has been made. You have a low point, you have a nice swing point, right? Intermediate lows here, a nice big swing point, intermediate lows, nice big swing point, intermediate lows. What can we expect? What can we expect here? A nice big what? Swing point. Intermediate lows, right? Intermediate lows to take us there, and then boom, a nice big swing, whether we want to go up or down. This is what I'm looking for. I'm looking for nice, like following this pattern and understanding that this look at all these swing points, right? Look at all these swing points here. Look at all these swing points here. All of these, right? Look at all these swing points down here, right? Ultimately, we're making very obvious points. Have we made a very obvious point? I mean, the most obvious is this one, but it's still not a big point. Like we made one similar to that here, and then we came down. We haven't made one yet. We haven't really made one. We just swept the high. We haven't made a big, nice swing point. I want to see us make something like this, right? Next point. Then what do we look for? We look for a model to present itself to take us here. But if we don't do that right now, right? Let me erase this again. Reasons why I want to see us go lower right now. We just swept the highs. We just swept these. Do we have a reason to go higher? Yeah. Does it have to happen right now? No. But we know we have a reason, right? We have a reason. This is a reason to go higher, right? Why won't we do that? Why is there a possibility we won't do that right now? We could, but maybe we won't, right? Until we we continue building this structure, right? Make sense? So I'm not, because if we rush this right now, right? We could do this and then build our structure. But we're just gonna observe. We're gonna watch to see what price tells us. If we create a model, we'll take it. If we don't create a model, or if we create a model and it reverses on us, then it's fine. Then we get stopped out. We know the cost of doing business, $280 per trade, and that's okay. Makes sense? And let me know if it makes sense, because if this doesn't make sense, then I don't know what to tell you. All right, let's get rid of all these drawings. And I will be right back, actually. All right, we're back. We are back. We're back. We're back. Let's do this. Anyways, all right. So we saw this. We're looking at this. We understand what we're trying to do. We just swept these highs. Let's mark this. If you want to be able to see all of this, so let's just do a high time frame sweep, right? And we're gonna put our point of liquidity here. This is our external buy side. Nope, this is internal. Hold on, where's external? External buy side liquidity here, meaning we have buy orders here. If people sold here, if you sold and you had a buy stop here, this is buy side liquidity. Okay. We're looking to rebalance this move. Can we rebalance this 50%? We said we were looking for we're looking to move into maybe this fair value gap inside of this breaker block, 5-minute breaker block. Let's mark that out. So I want to see us move from here, in between here and here, right? And then maybe this 15-minute. This 15-minute fair value gap. Okay. So now we can go back in here. Now we know why we would want to go down here. And I'm also looking at ES, right? To see what ES has done, what it hasn't done. Let's look at ES in the 1 hour. What do we have? We do currently we have an SMT here. This is a bearish SMT. Bearish SMT between right here and here. SMT, basically one asset made a higher high than the other, or you see it right here, right? Like this is higher than this, and this is higher than this, so it doesn't match up. This is a smart money trap, SMT. We had another SMT here. But we're looking at this big SMT that this was created on the this is a 4-hour SMT here. This is daily SMT actually. Daily SMT. Ooh, okay. So daily SMT. Okay. So we moved into this order block here, tapped it. That's it. Moved into the 15-minute. Ultimately, just tapped the order block. Tapped the wick. I was waiting to see if we did anything with the body of that, but nothing yet. Mm-hmm. Okay. I think if I'm gonna take one last trade here, it's gonna be this fair value gap here. Take this here. Down to this fair value. Well, to the beginning of that fair value gap. I don't think I want to take it to. I don't think I'll take it here. I might manage my position here, but I don't think I'll take it to there. So let's see. Let's see what we got. My entries here. Right. That's pretty good actually. Yeah, I think I'm willing to take this here. So 662 50. No. 275 right there. My stop My stop is going to be at 66975. My stop is right there. If we get filled, it will take us down here. So we just disrespected this 5 minute. Let me get rid of all of this real quick. Just make this chart a little cleaner. Okay, so ES just moved into that fair value gap. Maybe we don't move into that fair value gap or NQ. If ES moves above and starts to take us out here on ES, then that's where I'll manage this trade. Actually, I do like this. I do like this a lot. We'll keep it here. This is still a 3. I feel good if we went, even if we moved here, but so here's what I'll do. I'll do half of my position. I'll enter half of my position up here at 66025. I'll enter half of it here. Mm, 1614. Okay, so I'm gonna do $152. Yeah, that's perfect. I like this. Hmm. Hmm. All right. 1 second, you guys. Gotta figure this out. Okay. So that's what I'm looking at for today. For some reason, Trade of Eight's not letting me enter in any orders or exit any of them. So I'm going to just do nothing at this point. Um, I was looking for this entry here. I'll see how it plays out. Even if I don't take it, I'm curious to see how this plays out. If we were to do this and get filled, and what my risk is, and what my if it hits the profit. So I'm gonna, let's see, 266,903. So 266 risk here, and I want to see if this takes takes basically see if it hits, right? So even if I can't get into this trade, if we get filled, I'll see, and I'll kind of uh, I'll basically treat it as if it was if we were in the trade. I'll treat the risk the same. Like mentally, this is a 266 risk that I'm willing to take on all of the accounts for this. And my reason is fair value gap, rebalancing of this whole move, which technically we could have already done here, right? Technically, this would have been, oh, where is it? Technically, this is a normal rebalance of this move. All right, moving to this order block, tapped into it. So we'll see how it plays out. I went into 50% of this move. We have the starting point of this fair value gap, right? So even if we don't trade inside of it, at least we tap into it. That's where I would take profit. So that's what I'm looking to see. Again, I can't get into this trade, but that's what I'm looking for. So that's where I'll leave it for today. Um, Looking for these models felt a lot better, knowing and understanding what we're risking, right? The anticipated cost of doing business in the market. We observed and we participated in the market in a few of these moves. So we weren't necessarily afraid to take entries. We knew what we were looking for. We committed to the trade and we managed them, right? We took one loss, we took one win. And honestly, I've got to say that the win that we took was a really, really well managed position. Um, and even though we won't get a lot of those, we still got, we took the opportunity on the one that we did get. So, all right. Hope you guys have an awesome rest of your day. Feel free to watch this play out. I'll review it later. But for now, that'll be it. Again, $266 of risk with 4,903 profit. This is a 3.3, almost 3.4 to 1, which honestly yields for a great trade here, even if we get stopped out. We have market structure shift, and what we want to see is to rebalance this whole leg of this whole move up. Want to rebalance it because we've already swept the high time frame, and we have a high time frame SMT, which is bearish. So just a little bits and pieces of confirmation that we're getting right into this. So keep an eye out for it if you do get in, and let's see how it plays out. So anyways, I'll catch you guys on tomorrow, 8 a.m. And we'll be here. Bring your coffee, bring your energy drinks, whatever you have. And yeah, see you tomorrow.